Good morning, Fractal Effects team. Sorry, we were having a little bit of difficulty with the live stream. Before we get started, please make sure you read the disclosure in the description of our YouTube channel or in the footer section of fractaleffects.com. If you're following along with us today, make sure you're doing a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we did have news drop today at 10 o'clock Eastern Standard. We have a double break to the upside on US 500 and NAS. We're waiting for a pullback roughly into this area and then a setup. Right now our low-hanging fruit is the daily high, which is right there, and then we have a 4-hour fair value gap just above that. We'd like to get that retracement and then that displacement candle up from here. If it continues to run off without us, then there's not too much we can do about it. US 500 just hit a 4-hour fair value gap. That could cause both of these to retrace. The other thing to watch for is US 30 has not given us a double break, which means that there could be a potential reversal right here at this 4-hour and right after NAS takes its daily high. So you got to proceed with caution. That's why we want to wait for that retracement, and then we'll reassess once we have that. But right now, this is a runaway market, not too much we can do about it. So there's your bullish confirmation. Now we cannot sell this market. Even if we get a reversal, then we're just going to watch that run away. We have bullish confirmation on both US 500 and NAS, and we have a double break to the upside. So this is the area of interest now. I want to see that retracement to get that foothold and then climb the mountain past the daily into this 4-hour. But we're going to again proceed with caution. And for US 500, I want to see it retrace back to, at the very least, down here. I'm just going to get rid of this. Hold on. My apologies, we're having a little bit of issue with the stream. Some of this was for the early setup, which we caught. Keep in mind, this strategy is fractal. That's why we're called fractal effects. You can use it on the 1 minute, the 5 minute, or the 15, whichever one you're comfortable with. So there was a 1 minute setup that we caught early this morning, right at market open. Sorry, just getting rid of all these boxes that are no longer necessary. The only one that we're focusing on is right here. I want to see a retracement at least down to here. Could be deeper. There's your NYC opening fair value gap. Where the market translator paints out everything you need. You don't need anything else. It'll tell you where your new week opening gap is, your new day opening gap, where fair value is. So right now, again, I just want to see a retracement back into this zone. And I want to see expansion met with expansion, and then a 5M bullish fair value gap setup to go long into this 4-hour fair value gap up here. And for US 500, again, same thing, retracement back down to at least here. The new week opening gap. I want to see expansion met with expansion, and that will be an engulfing candle, and then a 5M bullish fair value gap to go long to take out daily highs. If this continues to just run without us, without that retracement, that's like trying to catch a runaway train. That's not what we're trying to do here. We're waiting for the train to come into the station. We're waiting for that foothold to climb the mountain. That's what we're looking for. My apologies, I think we just had a reset here on the charts. Hopefully that didn't change anything. Indicators are still loading. My apologies, we've been having some technical issues with our streaming and our Wi-Fi connection this morning. So once again, just to reiterate, we have a bullish confirmation from the spotlight strategy, and we have a double break to the upside. So we're only focused on looking for buys. I'm not looking to sell this market today. Also on the daily, Tuesday was lower than Monday. Wednesday swept out both of those and bounced off of a 4-hour fair value gap. So again, very bullish right now. Only looking for a buy, nothing else. We're also green on the 1, the 5, and the 15. So everything's lining up. We're just looking for that retracement. This could be it right here. This could be our retracement back into the zone, and then our fair value gap to go long. Just got to be patient now. Remember the main thing about the market translator, and I want to really reiterate this. This is not a time lagging indicator. This is not like any other strategy. The market translator is translating the algorithm that controls the market. It's letting you know where all the key areas are that the market wants to retrace to and push from. Nothing to do with support and resistance. That's not it. These blue zones that the market paints out, a little hard to see right now with all the boxes we got painted here, but if I got rid of all of these drawings just for a second, these blue zones down here, the market is drawn to and pushes from these magnetic zones. Remember, this is chaos theory. We sat down with a chaotician, we sat down with 3 quantitative analysts to actually put this together. The amount of computation that's happening on the back end of this market translator is ridiculous. And every single day, this lets you know exactly what the market wants to do. When you get a double break, that's the dealer revealing their hand. That means the market wants to go up. You don't just jump in immediately. Obviously, you wait for that retracement. There's an 80% chance that the market will retrace back into this zone, and then that's where we look for a 5M bullish fair value gap to go long. It's a little hard to understand when you see all these boxes and colors, but once you get to understand this, which you can learn in 30 days, by the way. We have users that are proficient in 30 days and they're already trading in demo accounts or prop accounts, literally, in a matter of weeks. US 500, still looking to retrace. We want to get down here, at least down to the 20 EMA. And then we'll see if this gives us a setup to go long. Just got to remain patient. Patience is what separates profitable traders from the 95% that fail. Prop firms are built off of the balance of that failure. 95% people failing off of those tests. That's why that business model even exists. Looks like we're getting that push down now. I want to see a full displacement. I want to see candles pushing down back into this zone right here. I want to see it touch this 20 EMA, and then I want to see that 5M bullish fair value gap set up. Remember, you can't climb a mountain without a foothold. That 5M bullish fair value gap is our foothold to climb this mountain all the way up to this 4-hour fair value gap up here. I cannot sell this market. Let me reiterate that. I cannot sell this market. I have a bullish confirmation and I have a double break. That's the dealer revealing their hand. This algorithm right now is telling you that it does not want to go down. It'll retrace, could retrace as deep as here, possibly down here. But once we get that setup, we're only looking for a long setup. And it has to happen in our window of opportunity. Remember, if you're not in a high probability trade setup within 1 hour of the range formation, you're done for the day. Come back later. Check out the Asia session, the London session. Trust me, these setups come all day long, but they have to be in your window of opportunity. The second that window closes, that's when the probabilities decrease. Anything lower than 70% probability is gambling. That's what keeps us successful. That's what keeps our team profitable at the end of each week, at the end of each month. As mentioned before, as soon as you get this double break, as soon as you get this bullish confirmation, there is an 80% chance that the market will retrace back into this zone. So just wait for it. Too many people see all these candles running up and they jump in right here. We're waiting for this retracement back into this zone. Until that happens, we're just sitting here patiently watching. There's no FOMO. Sitting here comfortably watching. I'd like to see displacement candles. Faster the better. But it's still early. About 13 minutes till 11 o'clock. So US 30 is the only one that did not give us a double break to the upside. That means one of two things. Remember, it's only a buy model until it's not. It's only a sell model until it's not. That means once it's completed everything it needs to do in that direction, it could drop. NAS has tapped previous day's high right here. Let me just fix this yellow line. The indicator paints that out for you. I just like to paint a bigger one on top. So it's already hit previous day's high. US 500 is also sitting inside of a 4-hour fair value gap. Remember, when you're using a pair for divergence, match up the levels. They're not going to be the exact same levels. It doesn't have to be daily high to daily high. It could be daily high to consequence encroachment of a 4-hour fair value gap. There just has to be a zone that's similar. A higher time frame PD array, premium discount array. So this is at the 4-hour. This is tapped the previous day's high. That means that they could all technically drop from here. That's why we wait for that retracement. That's why we wait for that 5M bullish fair value gap. We do have a lot of rules. There's literally a lot of rules on our checklist before we enter a trade, but guess what? That keeps us profitable. We enter less trades than the average person, but they're all higher probability. The math works. If it's a 70% chance that you're going to get it right, would you buy that lottery ticket? And every time we enter a trade, we go for a 1 to 3 risk to reward, risking $1 to make 3. That keeps you profitable. Stick to the rules. All this gesticulation doesn't mean anything to me right now. If anything else, it could be setting up for a power of 3 setup where we could get consolidation here and then a drop down into the zone we're looking for and then a push up from there. But we're going to just watch this patiently. For beginners, anybody joining us for the first time, I get how all these colors can be jarring. Some of these are just painted on by me. That's not actually part of the indicator. As mentioned before, we had an earlier trade setup on the 1-minute time frame. Let me just delete some of these. Sorry, each time we go live, we get a little bit of lag time here with the charts, which is annoying. Just want to clean some of this up. As mentioned before, some of these levels are from the morning session. We got a nice clean setup on the 1 minute. We took it this morning right at New York Open. Got in right here and got out right here. New day opening gap. That was on the 1 minute. This is on the 5 minute now. That's the beautiful thing. You can find these setups on the 1 minute right in the morning. And if you miss that, in the 5 minute. That's why we're called fractal effects. What's happening on the smaller time frame is happening on the bigger time frame. US 500, slowly pushing down. That's where these lines were from. Again, we took it from here to here. So right here, this is my area of interest. I don't want to paint out any new boxes just because it's going to get a little harder to see. But yeah, this fair value gap down here and this fair value gap, between these two, the 20 EMA and the end dog, this zone is where I want to see a retracement back into. And if it leaves without us, it leaves without us. Remember, day trading is not everyday trading. If you don't get that setup, you don't take it. Don't think you have to take a trade just because you got on the charts, opened up your MetaTrader or whatever. That's not how this works. About 8 minutes till 11. As mentioned before, if it takes off without us, it takes off without us. That's fine. But I'm not interested until it retraces down here. It has to touch at least this 20 EMA. Just patiently waiting. This is a beautiful setup, actually. As mentioned before, Wednesday, earlier in the middle, actually from previous day close to current day open, we swept out all the lows. So Wednesday swept out Tuesday and is bullish. So this is all a good sign. This is matching up as far as the higher time frame confluence. We're green on the 4 hour, the daily, the 5, the 1, and the 15. Now I just need that foothold. For beginners, I recommend you only look at Tuesday, Wednesdays, and Thursdays and try to avoid obviously the high impact news drivers, non-farm payroll, FOMC, CPI, PPI, anytime Fed Chair Powell speaks or Trump speaks. Avoid those for beginners and just concentrate on Tuesday, Wednesdays, and Thursdays. Mondays can be a little chaotic. Friday, it's called Trap Friday for a reason. If you're not following the strategy to the T, you can get trapped. About 6 minutes away from 11. Still waiting. Now again, looks like we're getting a bit of a power of 3 setup, consolidation, and then that manipulation will take us right into this zone and a possible distribution. Now the manipulation isn't guaranteed. It could just be consolidation and then distribution, but that's what we're hoping for. Again, 80% chance that there will be a pullback into this range. So this is lining up perfectly for what we want to see. But if it takes off without us, again, it takes off without us. There's our daily standard deviation high. The market translator works this out for you. Does all the math to figure out exactly how high the market could go on this particular day, depending on the range that it's created. So we could break all-time highs. Right there's the DSD high. Could go past this 4-hour fair value gap, but that's the low-hanging fruit. So we want to get an entry here, right into this 4-hour. That's what we'd like to see. Still waiting. If anybody has any specific questions, feel free to ask. We'll try our best to answer them. There's so many strategies on the market that people will try to rope you into. We're done with strategies. These are not strategies. This is 20 years of aggregate data that we literally put through many, many filters through quantitative analysts and through chaoticians to tell you exactly what this market has been doing over the last 20 years and wants to do on a daily basis. This algorithm is ridiculously predictable once you have access to the market translator. That's why we say, as soon as you get a double break, as long as you haven't hit a higher time frame PD array, that's the dealer revealing their hand. This market wants to push up after it does a retracement. Let's see what this setup would look like. Again, aiming for here at least, somewhere down here. $2.78. So your risk to reward has to make sense as well. I've passed on many trades just because the 1 to 3 risk to reward didn't make any sense. 2.78 isn't bad, but it all depends on how you get in and where you get in. Right now we have consolidation. We're hoping for a consolidation, manipulation, distribution. That's the only thing that matters. All of these methods that people try to teach you, surprisingly, they got some things right. But that's no different than astronomers from 1,000 years ago looking at the sky and getting some things right. Doesn't necessarily mean that they understand how it works. They didn't necessarily know what a star was, but they knew they could see it, they could identify it. That's what's happening with a lot of these strategies. Wyckoff, for example. Wyckoff tells you exactly what's happening. It doesn't necessarily, it's not good for the forecasting. It's not the method that the market takes. ICT got certain things right. His education or his class on PD arrays, premium and discount arrays, is amazing. I recommend you check it out. But that's all. as far as his methods, he'll be the first to tell you he's not the best at his exits. He doesn't always know exactly where the market's going. We're aiming for the DSD right here. This lets you know exactly what to aim for. And then if there's a higher time frame PD array along the way, that's where you secure your profit or get out if it's 1 to 3. Low-hanging fruit, don't get greedy. Past 11 o'clock, about 29 minutes left in our window of opportunity. So again, if it pushes, leaves us behind, that's fine. Math only makes sense from here. And sometimes you have to be okay with that, just watching it go by. Never jump in. Don't get FOMO and just jump in because you think it's going to hit this 4-hour fair value gap. It's all about getting the right entry. People who jack up their lot size just to go from here to here, it's the dumbest thing ever. What if the market literally stopped right here and dropped to do that retracement? If there's an 80% chance that a retracement could happen, why wouldn't you wait for it? And if it's that 20% chance that it leaves without you, who cares? I'd rather buy that 80. I'd rather buy a lottery ticket based off of an 80% chance than a 20%. Still consolidating, still in this area. Still just gesticulating. You never know when it can drop though. There's a lot of people out there that think a power of three. By the way, nothing on its own is 100%. Not even power of three. I've seen power of three turn into another power of three. That's just how it works. It could go consolidation, manipulation, consolidation, manipulation, then distribution. Not one single strategy on its own is 100%. You want to use it in confluence with everything. You want to use it with divergence. You want to see what all the other associated pairs are doing. So right now, still forecasting this 4-hour fair value gap and possibly the DSD high. But again, we have to get a good foothold entry. We want it from down here. That's the only way that 1 to 3 makes sense. Risk to reward right now, even that's a 2.78. We'll adjust this depending on where that retracement is. But without that retracement, I'm not entering this. If it's a shallow retracement, for example, right here, without even touching the 20 EMA, there's less confluence here. I'd rather have at least 3 to 4 points of confluence than one and get it right. Even if I got that 1 point of confluence and got it right, that was actually a fluke. That was a long shot. That was literally a mid-court buzzer beater and you got it. Great. Can't do it every game. You want something that's repeatable, something that you can use every single day, even if it misses. Something that's consistent and profitable. You'll never see us enter any position haphazardly. This is the zone of interest. Till it touches that 20 EMA, I'm not even interested. Right here, this red line. Same thing with US 500. Until it comes back and touches this red line, I'm not interested. I don't care. It can take off without me. I'll catch it tomorrow. Or we have users that are doing at the very least 3% a week. That's 12% a month. Show me some bank that will give you 12% a month on your balance, on your investment. And the reason we're able to get numbers like that is because of our rules, because we're consistent. Said it before, we don't take as many trades as everybody else. But the ones we do are way higher probability than the ones that the average person is taking. Because we have better targets. We have better math behind it. We have a better strategy. That's what we rely on. Still waiting. Till it hits this 20 EMA, I'm not interested. It's like watching paint dry. I'd rather watch paint dry than be sitting there in a nail biter, hoping that the market turns because I got in at a weird price and I'm hoping that it turns back around or it goes in the opposite direction. 20 minutes left in our stream and our window of opportunity. Getting a push down now on this candle. 3 minutes, 40 seconds left. Let's see if this is the one to do it. Looks like it's starting to push down. Remember, after you get a double break, we want to see a retracement back into one of our key zones right here, new day opening gap. I want to see an immediate rebalance, displacement met with displacement, expansion met with expansion, engulfing candle, whatever you want to call it. And then I want to see a 5M bullish fair value gap. That's our foothold entry. As soon as we tap that, again, we drop down into a 1 minute. Expansion met with expansion when we hit the first 1 minute fair value gap. And that's my entry. A lot of rules, I get it. But again, this is why we're profitable. This is why it's hard to trap us. This is what separates us from the average retail trader, dumb money as they call it. They're called that for a reason. Think about that for 2 seconds. So think about that concept, that this is our community. Just because we know that the market's going up doesn't mean that we're going to take it. We're still cautious. We're still careful. There's a sense of humility there. Last thing you want to do is let your ego get a hold of you. Hubris. Get overconfident. Have that be your downfall. But that's the community that we're building. There's nobody here talking about flashy cars. This is all about people being consistent and profitable. There's a lot of things that are going to change in 2026. It's exactly 1 year from now, things are going to get wild with AI. But now think about this for 2 seconds. AI is going to replace majority of people's positions, and immediately people are scared. But think about this for 2 seconds. Let's look at it from a perspective of an investor. So you're trying to tell me they're going to replace the people are going to lose their jobs. Okay, I get that. That's sad. Nobody wants to see that. But so you're trying to tell me that they're being replaced with AI for a reason. You're trying to tell me that productivity is going to go up, that these some of these stocks. So you're trying to tell me that the S&P is going to start climbing because those companies are more profitable. Then become an investor. Then focus on the S&P. It's not going anywhere. For anybody who thinks that all of a sudden tomorrow that the stock market's going to disappear, why would it? If anything else, the S&P is going to skyrocket with AI. Productivity is going to go up. Production is going to go up. Possibly quality of products is going to go up. Enhancements, technology, all of that is going to increase. We're going to see the S&P, we're going to see NAS, we're going to see US 30 skyrocket. So it's a shame that people are going to be losing their jobs, but immediately switch over to investing. It's going to become an investor-driven economy. Perfect example is you love McDonald's. Well, you invest in McDonald's, you eat McDonald's, McDonald's pays you dividends because you're invested. It'll become this reciprocal relationship. Because that's the biggest fear. Everybody's like, what am I going to do when I lose my job? There's a million things to do where you can make money sitting at home. And investing is the biggest one. Start now. Invest in your future. Invest in this knowledge. There is no better strategy on the market because this is not a strategy. This is literally translating the algorithm that controls the markets. It's telling you what it wants to do. Here comes our retracement, the one we were looking for. Let's see if it gets as low as the area we're looking for, though. I want it to touch this and then set up. We got about 13 minutes left in our window of opportunity. If we don't find a trade setup within that time, and we call it. We don't sit here staring at the markets all day watching paint dry. Let's see. Be a little bit more patient. For any of our users, make sure you check out the Market Watch. We've included this in your package. Anytime you can't find a trade setup, jump into the Market Watch. Make sure you're reading that on a weekly basis. We're not allowed to give financial advice, but we've done the next best thing if we've gone out and we've actually interviewed the analysts. These are their projections, what stocks they're interested in, what they're excited about. These are big players on Wall Street, and they're letting you know what they think, where the future is going, etc. Take a look at Market Watch. It's part of your package. Read the articles. They're updated on a daily basis. Still waiting for that retracement. I want to see it hit this 20 EMA. Let's see. Slowly coming down. This is the area right here that would give us 1 to 2.78. This late in the game, I'm hoping it gets down here. Let's see. Ten minutes left. Slowly pulling back towards that 20 EMA. Taking its sweet time. But again, this is the zone that I'm interested in. Let's see if it gets as low as this new day opening gap. That's our first area of interest, past that 20. Slowly coming down. A little bit further, come on. So anywhere in this zone is where we want to see that. Expansion met with expansion, engulfing candle, and then a setup to go long. If we don't get it, I'll leave that with you guys for your homework. Come back later, check if that actually happened, that setup. As mentioned before, we want it to happen in our window of opportunity. US 30 still hasn't given us a full double break yet. Looks like it's close though. Just waiting a little bit longer. Let's see. Three minutes, 15 seconds left in this candle. We're green across the board now. Remember we were red on the 30 and the 1 hour? As mentioned before, as soon as you get that double break, that's the dealer revealing their hand. This is letting us know that the market is going up. But it doesn't mean it's ready to go. Right? It's like a pie in the oven. It doesn't mean it's fully cooked yet. You just know that it's there. You can smell it. But now all the confluence is to the upside. It just has to give us a good entry. That's our low-hanging fruit, 4-hour fair value gap, sliver of a 4-hour fair value gap. And this is where, if you ever wanted to roll your stops and you still haven't hit your 1 to 3, then you aim for all-time highs and the DSD high. We did all the math for you. This is as high as the market wants to extend. Can it go past this? Yes. But this is on average over the last 20 years how far this market wants to extend and has extended during a session. That's what the DSD high is. DSD high and DSD low, daily standard deviation. We did all the math for you. That's where you take your absolute final take profit. If you're still in it after this, that's where you take it. Right as soon as it hits it, because the second it hits it, it could turn around. Six minutes left. Still just gesticulating. Looks like it's going to be one of those days where it just pushes late. But we're not interested in that. It's not in our window of opportunity. We're not interested. That's what saves you. For anybody who's new, remember, the number one rule is capital preservation. It's not making money. That's where most people lose. Capital preservation is our first primary goal. Then it's making money. Safeguard your position. That's why we roll our stops. The second we get to 2R, a 2 return, we immediately roll our stops and we take some off the table. Now we're in a safe trade. Follow the rules to the T. 5 minutes left in our window of opportunity. If that closes, we'll call it. So this is our last 5M candle. We're not going to clearly get the setup we're looking for because I wanted to see a drop here and then give us an immediate rebalance and then a 5M bullish fair value gap to take that foothold up. So we'll leave you with some homework. Come back later, check it out, see if that happens. If it hits this zone, gives you that immediate rebalance, 5M bullish fair value gap, taps it, and then goes into the DSD high. That was our forecast for the day. Unfortunately, it didn't happen in our window of opportunity. But it's Wednesday. We'll be live again tomorrow. We'll watch this final candle play out, though. Three-minute, 32 seconds left. Please make sure you check us out on fractaleffects.com where we teach high probability trading. 30 days is all it takes to learn this. We've created the easiest strategy for you to learn. We don't even call it an indicator. It's called the market translator. It applies on your charts like an indicator, but it's actually doing real-time computation. It's not a time lagging indicator. It's showing you exactly what the algorithm of the market is doing, and it's forecasting for that day exactly the direction that the market wants to go. Please check us out on all the social medias, fractal.effects. We're always uploading new educational material and uploading our trades that we've taken, even on days we're not live. Also hit the subscribe button, turn on your notifications. Please hit that like button if you learned anything today. We really appreciate it.